Well, g'day there, traders and friends, market participants right around the world. You are here with James on behalf of Pivot Point Trading as I sit down and bring you this midweek market update dated Wednesday, the 9th of November 2016. A very interesting week. Collectively, as we recap, obviously, the Trump presidency, the markets have reacted somewhat unexpectedly. I think the consensus moving into the election was if Donald Trump was elected, there would be a little bit of mayhem in the market. Now, during the actual count, futures were halted limit down. However, as we moved into trading on Wednesday, they turned around and intraday moved green and closed very strongly. The Nasdaq, for instance, closed up over 57 points on Wednesday's trading session, and the week or over the past three trading sessions, we have seen a rebound on the Nasdaq up just over 200 points. The Nasdaq itself is still holding this intermediate trend line. Now, what makes this move interesting, and this is across the board as well, so you need to understand this or at least think about it. Does this move have legs? I mean, is this a long-term move, intermediate and primary continuation of the long-term bullish trend, or is this just a knee-jerk reaction? And is the market going to taper out around old resistance areas? Here's the Dow Jones Industrial Average, relatively the strongest market that we look at. You can see right here we're closing back up at the July highs and also the August highs. It wasn't too long ago where again we were on the precipice of breaking down. The S&P 500 has broken above this little short-term minor level trend line. We are still quite a way away, quite a distance away from our resistance level just shy of 2,200, but the past three candlesticks have been very, very bullish. Long day Morobosu candlesticks, and the volume which came into the market on Wednesday really supports this move. However, that was looking at the Dow and the S&P. The Nasdaq and of course the NDX sort of paints a different story. They are relatively percentage-wise a little bit further away from their respective highs. Here is the resistance level again, September and October. A little bit later on the Nasdaq, petering out here around 5,350. We closed at 5,250, so we're still about 100 points away from those old resistance targets on the Nasdaq. Strong volume again on Wednesday, but this has been quite a strong bounce that we've seen during this current week's worth of trading. We obviously still need to move through Thursday and Friday, let the dust settle a little bit and see whether or not this move is legitimate, whether it has legs, and if it is going to break out above these structural resistance areas. If we start to see this market turn right around this location on the Nasdaq, if not just a little bit higher, it will signify again potential larger chart patterns that we've been speaking about in that pro analysis class. Now, to round out this, as we just recap some of the markets, I've been talking about the Nasdaq 100, a very important market because in terms of chart patterns, it's really showing up, or at least displaying, a very disciplined type of trading style that we look at as chartists. Now, we've been asking ourselves the question, is this potentially some form of a left shoulder over here? Is this a larger type of topping head taking place right now? And if I zoom in into the detail, this sell-off, which lasted 9 trading sessions moving into the current week, it came down and it has touched that support level just above 4,650. This rally, which has taken place really Monday through Wednesday, is back up into this resistance area again, just shy of 4,850 on the Nasdaq 100. In fact, we've had this red box drawn in our chart, which we need to pay close attention to. Right now is key. It's very important. Potentially a short-term or even a long-term primary resistance area if in fact this turns out, or if it does hold. Now, that is pure speculation at this point. The markets have reacted very strongly. In fact, the futures moving into and closing on Wednesday more or less did a 1,000 point turnaround, which was quite amazing to see. But at the moment, again, volatility has peaked. It has spiked. We have moved off from the lows. It's like a rocket ship pointed at the stars. But our first point of interest or conflict is resistance, because we are more or less running into it across the board on these markets, and it's going to largely indicate to us whether or not this move is legitimate, sustainable, long-term, or if in fact, again, it was simply people buying the dip, which is going to fizzle and fade. All will be revealed in due course. But right now, again, if you can stomach this volatility, go for it. If not, I'd be looking for big range breakdowns or breakouts. and just to let this sort of settle a little bit, let the volatility come back, or at least subside a little bit, before we can look at the true structure of this market and get a really good inclination moving forward as to where and how we are going to round out 2016. All the best, traders and friends. It's James signing off on behalf of Pivot Point Trading. Goodbye.